let's talk with Alan Blinder more about his latest views. He's joining us this morning from Princeton, where he's a professor of economics. Professor Blinder, you came out with these comments because there's this ongoing debate on spending, but your concern is that we talk about the idea of spending actually killing jobs, and your view is that's just not the case.
It's absolutely not the case, and I think it's a very dangerous thought. I mean, there is a reason to cut spending in the long run, very persuasive reason, and we have to cut it by a lot. But first of all, the notion that cutting spending kills jobs is perverse logic. Secondly, we don't need the cuts now. We have a weak economy that's sort of starved of demand. And the last thing we need is substantial cutbacks in any kind of spending, by the way, right now, including government spending.
But let's talk about how we do work on resolving the spending issue. One of the things you've talked about is having in writing a plan to reduce spending a couple of years from now, maybe not today, but in writing that we start doing it very soon.
Exactly. I think that's almost undoubtedly the right thing to do. You have to give the markets and the populace some confidence that the government's wrapping its arms around this deficit problem, that it's not just exploding out of control, which if we do nothing, it will. Now, we won't do nothing. Eventually, we will do something. It would be nice if we could do it now rather than later. But the notion is you can instill that degree of financial market and political confidence by legislating now substantial deficit reduction for the future, but not starting today.
We heard earlier today from Glenn Hubbard of Columbia on this very same issue, and he made the point that companies in corporate America are sitting on huge piles of cash. They are reluctant to spend that cash right now. If those companies can be convinced to spend that cash, obviously more jobs can be created. How does that whole thing unfold?
Well, there is a hope. I say it's only a hope. We don't have good evidence on this, that if you can instill the kind of confidence I was just speaking about, that the deficit's not blowing up, that would help a little. A lot of people say that. I think there may be something to it, maybe not so much. Another thing that's been suggested by me and many other people is to offer a tax credit for new hiring. You're right about that they're not spending. In fact, if you look at the details, they are spending on equipment and software. They're investing in the conventional sense, but they're not hiring. And that's really what's holding our economy back. So while I wouldn't want to do this in normal times, in these abnormal times, I'd like to sort of tilt the tax structure now in favor of hiring.
Of course, today everyone's focused on the Federal Reserve and what we're going to hear from Fed Chair Ben Bernanke. I know you've called for the Fed to be even more aggressive in trying to get the banks to lend more money. As for what we'll hear from the Fed Chair later today on where interest rates are going to be, say, 2 years from now, what do you think we'll hear?
Well, I don't think he's going to say anything about where interest rates will be 2 years from now. I think you're going to hear basically nothing. You're going to hear a modest downgrade in the forecast. All of us are looking at incoming data, and it's looking weaker than we thought 3 months, 6 months ago. You're going to hear a repeat of the extended period language, because the Fed is holding interest rates near zero for the indefinite future. You're going to hear a ratification of what we already know, that QE2 is ending on schedule and is not going to be followed by QE2 plus or QE3 unless something major happens. I don't think you'll hear that latter clause. That's me speaking, not on Bernanke's half. I think given what he has to say now, he'll try to lull the audience to sleep. He doesn't really have any announcements to make.
What about the jobs picture next year as we see the presidential election? I mean, what is your forecast on where the unemployment rate is going to be at that time?
Well, if I was sitting next to President Obama, which I'm not, I wouldn't be delivering very optimistic messages. 6 months ago, it looked like there was a chance that we could break 8 going down by election time, that get it into the 7s, which would have been a good psychological barrier to break in the downward direction, not in the upward direction. That looks very dubious now with the current outlook for the economy. And indeed, I think the current outlook for the economy between now and then suggests only the slightest drop in the unemployment rate from where it is now, leaving it maybe in the high 8s, between 9 and 8.5. That is not a very good number for a president to run for re-election on.
All right. Professor Blinder, thanks for your time as always and your insights. Alan Blinder, former Vice Chair of the Federal Reserve.